Three hottest business funding options of 2023 and beyond are. Hi everybody, welcome in. This is Michael with Viral Funding Solutions. I'm a business funding expert, also a business loan broker expert who's worked with a lot of businesses and business owners trying to help them achieve their goals, the right outcomes with the right strategic partnership and roadmap for longer term. I've helped out plenty of people as well as in their business as much as in themselves as a person, because that's who I care about. It's you as the person, the people, you as a human being. You are not a number to me. So I've been doing this for a while now, working with an array of services from top to bottom, SBA loans, all the way down to any kind of startup, creative credit-based financing, separating your personal from your business, and everything in between. And in this video, I'm going to get into the three hottest business funding options that I'm seeing for the rest of 2023 and bleeding into 2024. But before I get into any of that, just know this. It's a very difficult market right now without getting into the specific information surrounding that. But just know a lot of people are riding this wave where they are underneath the surface. Think about it like an ocean. You have the sailboat on top, underneath it, then you have the sharks, you have different creatures underneath it. And if you just take a dive inside just to refresh, you don't know what you're going to get. It's such an open ocean, but the deeper you go down, the harder it may become to resurface. It's harder. You can't get your oxygen bubbles. You can't get enough of. And so you're just trying to reach back up to the surface with no avail. So if you're one of those people right now who is riding that wave, you're trying to be cautious, whether you're on that sailboat or you're sinking and you're underneath, or you're on top going through heavy waters right now through the current, and you are not expecting that. It's just changed your weather. Be very cautious right now, especially if you're that individual who's out there applying anywhere and everywhere. Be very cautious, guys. I do want to address this, and I'll get into the topic at hand in the next 30 seconds to a minute. Please give me that. If you are the person applying anywhere and everywhere right now, that is not, for one, a good strategy. You're not building the rapport. Are they even relatable enough to you? Do they really get you and your needs? It's one thing to go to the bank and they don't understand your needs, because you can explain to them what situation you are in currently and then you're trying to dig yourself out of, or you're just trying to grow and expand and that's the only reason. But they're like, you're trying to create a parking lot and have extra reserves on this. You have raw material and you have raw land. Like, a lot of the banks won't necessarily understand what you are trying to do. The clumsy, sometimes underwriting process, how they're reviewing a file. They don't accept much people anyway. So if you're that person going there, it may not work. And if it does, there are alternatives that can be much faster and much smoother. Although bank rates, and you're talking about private lenders, and those rates can be a little bit different unless they're online, like bank term loans in a way. You have some of the even personal loans in a sense. You have the SBA loans and a few others. But be cautious, again, applying anywhere and everywhere. You don't want to fall into the wrong hands. A predator out there. Usually they're out there. And it's been much harder now in this market. And I'm in this industry, guys, with the best underwriters and lenders right now entirely. I've just worked through some of them earlier. It's 1 o'clock my morning through about 12:30. Extremely busy, helping people get their offers, them taking it, other ones that I'm waiting to hear back from. And I'm very careful in helping you. I'm never pressuring anybody. That's not my personality. I'm a Libra. I'm very introverted. I'm a very cerebral person. And what I want to say to that is I do a lot of work on my end. I analyze and I evaluate. I was going to say analyze and evaluate documentation, information, and very well. So you guys don't see a lot of what's happening on my side, but I do a lot of this up here, a lot of cerebral activity. I'm less of a talker. I'm going to try to get this going for the next couple of minutes, and then I'm going to try to go to the comments and then close up. But I do a lot of looking at the bank statements. I look at a lot of the personal and business tax returns, year-to-date financials, profit and loss balance. I look at everything, even before it gets into the hands of the lender. And if it gets into the organization, then we're there on the back end usually reviewing of what comes through. So I'm in communication constantly with the lenders, the underwriters, yourself, being very communicative, whether that just takes an email. It doesn't always have to take a phone call. Hey, we're just still reviewing. I'll get back to you when I have more information. And I'm doing that consistently every single day. And the amount of work it takes for me to do a lot of this, just keep in mind, I do a lot of brain work. I sit at my desk. I have a file come in. I've helped out this person in one way or another. They're coming in. And the way you can do this, guys, if you are new to it, go to the bio or in the description down below if you're watching this on YouTube or somewhere else later. In the bio, there will be a questionnaire. Click that link first. It'll take you to my questionnaire. Fill out some simple funding details. It can take you less than a minute, literally. You can give me some rough estimates, but be close enough, because the difference between you doing 20,000 on your lowest month and then you telling me you're doing 40,000 or 35,000 actually is a significant difference when it comes to underwriting a person's file. So just try to be as accurate as you can. So when that lands in my email, I then take the time to analyze and evaluate. It gives you a proper email response back, and even more occasionally now is a PDF showing you your best funding option and options. Whether you can or can't qualify, you will not have any question. And these are the best providers that are out there in the space. I do this consistently. I try to do it every day, file per file. So keep that in mind. That's the best place to begin. There's also for real estate investing and financing. Okay. Now, let me get to the topic at hand. I could spend a lot of time telling you be careful going over here because they're going to overpromise and underdeliver. You're not going to get the best relationship, maximum funding at the best terms and rates. That's normally what I see when people venture out and they try to do things on their own, or they go on underneath the wrong hands of the wrong person. So, number one, this is a business line of credit. This is a true business line of credit. Now, without getting too deep into the math, on if you took a certain amount of money out and it's revolving, how would that transfer over to the next month? What would be your actual interest when you take the money out? And if you were to take more money out, because that does get added to the original amount if you didn't pay the original amount back in full. So a business line of credit, this is where you have a revolving line of credit that you can withdraw from and choose to use whenever you need for any expenses that arise. And you guys know right now very well, and I know this too because I hear it from you guys, and very well, I ask the right questions. Think of me as a doctor. You go into the doctor's office. There's Dr. Granados, or however you want to say it. You walk in, you sit in the room. I come in a little bit later. I greet myself and I say hi to you. I ask you how you are and how you're doing, and I really do care. And getting to know who that person is to a degree also, because I'm an introvert, so it's hard for me to open up. It's very hard. Like, I don't trust people already. So for me to open up to somebody, you guys might think you have to, like, I have to earn your trust. Yeah, that's part of it. But a lot of the times it has to come on this end, and I'm going, are they trustworthy enough? Because time and time again, business owners are busy, but they also show me that they're not committed. A lot of you guys speak, but don't even take the action. So I'm very cautious when people go immediately, let's get on a call, let's do it. No, I have a vetting process. I have a way that I have to do it, process the systems, and a part of it is the automation to a degree. But anyways, back to this, the business lines of credit you can withdraw from. Expenses right now are galore. Insurance, trucks out there. You're talking about utilities, bills, mortgages, the fuel costs, whatever business you're associated in, material, vendors, suppliers, shipping costs. You have things overseas that you have to ship in, out. Oh my, the list can go on and on. You know your expenses, you know your income, and you know your expenses. And that's for another topic, for another time, is how to manage your income and your expenses. And the ratio to that could be for another time. And I've created content like this on the channel as well on YouTube there. But business lines of credit, you can withdraw and use that amount. So for example, you get approved, and in this market, it's very conservative. So let's say you get $55,000 to work with. And in this market, they can approve up to 35, if not up to 100,000. And it's a conservative market where if you don't offer up collateral, you're not going to get normally past $100,000. It's hard to do. It's very, very hard to do for a lender to lend that because of expenses, because of other debt obligations, the inflation, the economy, the cost of doing business right now. Pricing is up there, unit per cost, measures. There's so much I can get into. I haven't even breached the surface. And when I get into the numbers, it's pretty much game over from there. So that is kind of the approval range without collateral. With collateral, we can do an AR line of credit, inventory line of credit, secured line of credit. And that's something that we can discuss in time. But when you're looking at $55,000 and you're only needing, let's say for a season, you have X amount of expenses, Y amount of income, Z amount of ROI. Think about your ROI. Think about your cash flow. Think about your profitability. What is the expense of doing business without any cost yet monetarily associated? You guys got to think about it and go, what costs would I endure if I haven't put any money in this yet? What would be my costs associated with my day-to-day activities? What's your mission? How are you going to get to your vision? How are you going to align your values with all of that? So you have to really think about, before you've even put any kind of money in to something, whether it's going to help you grow, double, triple, quadruple your return on your investment, it's going to free up extra X amount of cash flow or whatever that is. And you need to take a temporary setback too for expenses. You really have to have that knowledge up here, because a lot of the times you can't yourself justify it, but it doesn't mean it's necessarily true. Do you have the data? Do you have the numbers to back that up? Do you know already from pattern recognition? Okay, so business lines of credit mitigates a lot of risk, especially when people need it for payroll reasons or hiring more people, inventory reasons, clauses, certain contracts, usually contracts at a lower amount, and they use this a lot for a combination of things. It can be used for equipment. It can be used just basically for anything. And a lot of the times people would use it too for real estate purposes. And depending on the type of business that you run and how you use that, then there might be some contingencies, but a lot of the times it's open to interpretation and use. So $55,000, I only needed $20,000. Why did I need $20,000? You have to know that answer, of course. You just don't take $20,000 out, Michael, and just use it just to use it, of course. But you have to know also how much money you're putting into this project or those projects, and what return on investment would you get from that. So you're using $20,000, and how much are you getting in return? Only $10,000 to $15,000? Okay, that's why it makes sense not to take a lump sum, because you're going backwards, and it's actually going to help lower your costs. And that's the good thing about lines of credit, is that it lowers your payments per week, per month. It really keeps it low. So if you had a lump sum, let's say, and you were expected to pay this back over 12 months, can you make a daily payment of $330, $230, and make a weekly payment of at least $1,500 to $2,000 or so dollars, and then make a monthly payment of around $8,000, $6,000, $4,000, $3,500? Are you capable of doing that? Or saying, hey, I have a line of credit where my interest, and I have revolving, I can keep it rather low. So instead of paying about $100 to $700 a day or whatever it is, you're then saying, I only have to pay how much a day? It looks like I'm only paying $25 a day. We're getting it deducted weekly. And in this market, fintech lenders are normally deducting bi-weekly. They're doing like weekly, not bi-weekly, but weekly. There are some bi-weekly and monthly options, but a lot of the lenders right now look at weekly. If worst case scenario, they're going to look at daily. But weekly, you're seeing a lot of approvals right now. It hasn't really picked up. But again, the business lines of credit are very good, because you can use it for those sudden expenses, those sudden emergencies, and you need to put an X amount of money into that to clear up some debt or to pay other expenses, and you're thinking about that. But it can be used for a variety of things too, and it's per business case, so I can't get too much into like if a manufacturing company or a construction company, and I know very well what the manufacturing and construction companies across all boards would be using that money for. And then you're talking about healthcare, any kind of medical field. You're talking about retail, restaurants. I can go on, and I've literally funded them all, to be honest with you guys, and repetitively. It's not like I just funded one restaurant company and then never funded them again for 6 months. But I do it very consistently and very well. I'm never pressuring you, never am that way. But I will highlight the benefits. If I understand that your numbers, you're not making sense of this. You're telling me that you're going to take $300,000 and make $600,000, paying back $417,000, $420,000, $430,000. It's because somebody's calling me. Sometimes that appears here if you're watching on Instagram. If somewhere else or doesn't do that, okay. So that's one thing. I can go deeper into the business lines of credit in terms of qualifications. They do want higher credit, 700 plus credit. 725 is normally what they're looking for plus in this market. They do want, and these are fintech lenders, and bank lines of credit are going to be even more difficult. There are the American Express where they have lenient credit requirements and a little bit less, and then you can also work with their business credit cards, and there's more on that. But you can get it at 700 plus. They want to see annual revenue requirements of 400,000, if not 500,000 in annual gross revenue. Certain industries, they want you to be doing closer to 100,000 a month. So they want you to start doing at least $1 million annually. $1 million annually for certain businesses is not even equivalent. It's not even good enough. They want to see above 5 million. And a lot of banks are looking for that. Banks are looking for 4 to 6, 4 to 8, 10 plus $1 million businesses. And it's just not going to help those smaller businesses that are just trying to get their startup or non-startup, but they're trying to grow, but they're trying to move from, like, let's say doing $300,000 in annual gross revenue to about $450,000. Now, how you get there, I can better understand the operations, and once you give me that insight a little bit more, I know how to make a better assessment of that. So number one being the business lines of credit. Number two, it follows behind this. Think about this as the, like, I don't want to say it's the smaller brother because this is actually king, but think about it like as a family. You have 4 in the family. You have the mom, the dad, the older brother, the younger brother, or the older brother, or the brother, and then the sister. Different ages, younger sister, whatever you want to call it. So here you have the business credit cards. And credit is king. So you could say that the credit is the actual bigger brother or the bigger sister, however you want to label that. But business credit cards are everything right now, guys. Everything. Everybody wants a business line of credit. You can't qualify. Or you can. This is what I do with business owners all the time. Well, they're looking to get a lump sum. They won't get as much with the business line of credit. But we can work with the lump sum because their ROI is there. I get their cash flow. It would increase their cash flow. So it makes, how much is it going to increase and what time? If you're looking at it 1 month to 6 months or 6 months to 12 plus months, what would it do to your cash flow? What would it do to your ROI? Well, if I needed this to automate this process, then in the next couple of weeks, I'm going to be increasing my unit per cost or whatever I'm doing, and I'm decreasing this on this part. As I'm increasing that, that's expenses that are going to rise. But over here, this process is going to be much smoother, and I have X amount of machines that are going to increase my output. And the expense may rise a little bit for what I do because I didn't get what I needed, but I need to temporarily do that and adjust. And that's what a lot of business owners need to do now. But business credit cards, you can even get these at 0% interest for 6 to 18 months, 6 to 20 months. Sometimes it's just 9 months. Other times it could be 20 to 24 months. And I help out a lot of business owners. And this is a true no-doc, startup and non-startup friendly program. I'm not going to get into the exact, like, all the requirements on this, but it does require stronger credit to get these. And we can do a specific program that I've tailored, myself and my team, and we really understand how to look at the reports on your credit and then determine, okay, based off a lot of that, with the pre-qualification soft pull, determine which cards you should be issued and at the amount you should get, depending on what you already have built and established on your personal side. A lot of the times we can do even 5 times the amount on what's on the personal side, just depending on what you have going on. And getting these secured cards where you have to put money in, collateral in to get money, you might not even get enough of. You might just start off with $2,500. That actually does you a lot of harm than it does any good, because when you try to then get these other higher limit cards, they're going to look at that and see how you attain that card, and then you may not have enough usage on that card for them to justify you getting a higher amount past $10,000. It won't always work that way. So you're putting in a lot of money to then get more money out, and it doesn't end up working out for you. So securing these credit cards, it can be favorable, especially if you're using them for lower expenses. That's how I would use those myself if I had lower limit cards. If it were on the personal side, let's just say on the personal side, not even on the business side, you should be using those at least for any kind of expenses. And if you have lower limit cards, higher limit cards, depending on how much you have total, you may just use your higher limits, which makes sense. And you reduce using your lower ones, and you can even just close those at times, but I don't recommend closing unless you ask for an increase, you had it for an X amount of time, long enough, and they won't increase your limits on those. And it's like a Capital One, like the lowest card. It doesn't make sense sometimes because your overall utilization, and you think about all the revolving accounts and everything you've built, that may be dragging you down a little bit in certain approvals, but nonetheless, I would normally keep those open. So business credit cards, I have a few points here on my document that I haven't even been looking at really, honestly. It's in here, but I'm not looking at it word for word at all, and that's not what I'm going off of. But these are just some bullet points that I put together so I don't miss anything. And so you can withdraw or liquidate the cash out of these 0% interest business credit cards. So think about Chase cards up to 50, if not more, if 50,000, if not more of that. for 12 months, 0% interest. And a lot of these cards too, you get rewards out of them. Travel rewards, cash back, 1.5, 2% cash back. So think about all the cards you get. And this is being a pro right here. And this is what I've been able to do and help out others realize that, hey, you probably accumulated in total $10,000 to $20,000 at the end of the year just by that alone. Just by using that. And you have that amount back in return. Think about what those extra $10,000 to $20,000 for you at the end of the year could do for you, if not more than that. It can do a lot. It can help you start up another business. It can help you put more money into your business so you have more cash flow to expand, to take that expansion project and know that you're going to still have enough cash flow for the remainder 1 to 3 months that you have, or however much time you take the funding for and what you need to use the funds for. Has to make absolute sense. So we can liquidate the cash out of these cards. Chase, you have Bank of America, US Bank, you have American Express, PNC Bank, Truist Bank. Even with like a US Bank, you can even do an up to $50,000 online, no docs, no PG, but it's still hard to do. For a majority of people, you're going to have to personally guarantee. If you don't have that in the door, you don't have enough established business credit, it makes it very difficult to say. And there's another way, guys, for you to establish business credit. So I want to put this in hand to hand. So you can do trade credit, vendor credit, fleet credit, trade credit, fleet credit, store credit, retail credit, because trade credit is kind of the overall. So what you're doing is you're getting these vendors that are then able to issue you credit. You're able to use that, make payments on, build up these accounts underneath your business credit report, build and report these trade lines to those business credit bureaus that those associations have, depending on where you go make those purchases. So if you have multiple accounts, if I say you have 5 to 10, you're doing better. I wouldn't say 5 to 10 in a market like this. It's strong, but depending on what else you have to look at that. And so 5 to 10 is a good entrance point. But I would say when you start getting over 10 plus accounts, you start getting closer to 20 to 30 plus. That opens up more doors and expansion for like retail. That opens up a lot more for no PG business equipment that you can use just to leverage with your business credit. So there are many things I can go into in each specific card. I won't do that in this video. And what I have all entirely, I'm banking with Chase and others, of course. You don't want to spread yourself too thin. Think about this, that a lot of people, they are already thin and strapped for cash. And you can only turn to one bank to get that money from. How much can you get, or can you get any at all? But the question is, how can I get more? It's not I can't get more. How can I get more? What skill sets do I need to learn? And what kind of culture am I innovating within myself and my company? And also, what kind of experience do I bring? A lot of business owners, they either have all of them, 2 of them, or just 1 of them, or none of them. And you're just getting started. And so having those parts of your numerator and your denominator divided by your experience is going to really make a big difference. So here I just stated the 0% interest business credit cards, rewards you could get for travel, cash back. I gave you guys a few things there on what could accumulate over a year, depending on the total amount that you have and what you're using at the rate you're using it. That could be justified as well. As I said here earlier too, you can use your personal credit card or credit cards depending on that limit or limits. And whatever you're consistently using now, because a lot of business owners, myself included, who have a lot of personal credit cards, we have higher balances now. And so higher balances meaning as in not that it hasn't been paid, higher balances on those cards that we can access. But how much total am I going to access from those 20 to 50,000 plus, or however much I'm using? I'm probably going to use a little bit here. I'm going to use a little bit there. For this one, I have these expenses. When you start getting accustomed to how you use that money, it does not become inexpensive. And when you guys have a pattern recognition of, okay, January through March, these expenses are rising, and I have these contracts set in place. If I don't show that I have this money in my account, this won't work, but I got to spend a lot of money for what I have currently with this inventory. So think about what expenses are going to arise before they do. And if you can catch them early, you'll know how to use these cards more effectively, and say to yourself, okay, so what if it's 18 to 27% interest after the introductory 0% APR whenever that term matures? You have to look at that. A lot of you use it as bad debt. Oh, well, I got to use a 24% interest credit card to pay off $5,000 to $10,000, $20,000. I have insurance costs. I have bills to pay. You don't understand, Michael, because after all of this happens, I won't have any other money to use. Well, how did all those expenses come up in the first place? John, Sally, that's the cost of doing business. A lot of the times you have to put a lot of money in to start one. And if you are already in one, you're still putting in a lot of money. And when you're growing more, your expenses tend to rise. But as long as you keep your revenue up here and it keeps moving higher at a rate than your actual expenses, and you at a point get to a tipping point where the expenses aren't really rising as your revenue is, and you're willing to do that more often, then it works. So 0% interest business credit cards. Number 3, the home equity line of credit. There's a home equity loan. There's a home equity line of credit. And a lot of you right now are saying, well, the interest rates, they're high. Yeah. But for those of you who were already prepared a year before, ahead of time, you would be in better position now to use that. A lot of you right now can't justify doing that, taking that out because of the rates. But a lot of people right now who were prepared or who are thinking about doing that, they can use it to pay off other expenses. They can use it to ride the wave, so to speak, before everything again smoothens out. So if you have to kind of, those creases on like paper, when you just like flatten it out and you got to do those little things, open it up just to make it all smooth again before the next wave comes in. And that could be in some time. And it also depends on what your goals are. Every industry is different. When it comes up, when it goes down. The market conditions are one thing that dictate that. Supply chain issues, you have a lot of things. You have things into the HELOC, but you can stay in business much longer as you're riding that lower wave, so to speak, before again it smoothens out and then the high tides come in. You can ride that like a surfboard going through it. And if you're not experienced riding a surfboard and you just so happen to catch a high wave, well, I think we know how that can turn out. So that's one thing to do. Be very cautious and understanding where your investments are going right now. Understanding where your margins are, where your margins could be if you were to not only use the money by taking funding, but your current position right now. If you're circulating more money inside of your business, how is that money being allocated? It's always my question when I understand that. I go, why are you putting an excessive amount of inventory into the season where last 2 months you showed this and then you haven't shown a significant difference? And from your pattern, it shows me that there hasn't been much of a change. So we need to get rid of this as fast as we can. How do we propose a way to do that? And then to get to the next part. So it just depends on the use of funds, and I could have drawn a lot of examples. But you can use the HELOC. Let's say you were to take out $50,000, put it into your checking account. You can pay the HELOC with monthly payments with that $50,000. So whatever amount you do take, if it's a surplus amount, you can pay that amount. Put that into your account, ride that low wave, let it help you move into that next transition. And I can give you guys a lot of examples. I won't spend too much time on that though. That's the end of this video. I do want to go into the comments and see if anybody has said anything. There are some that I saw earlier. But all information, guys, in the bio description down below. Keep in mind, guys, I analyze documentation every day. When I'm not here, I'm not talking. I'm normally in my head. I'm in my head every single day working. You guys don't know the amount of hard work that actually goes on this side. And I get what you guys go through. I always put myself in your guys' position every single day. I literally do. I really do. And I know you're doing a lot of hard work. You're trying to make it happen. You're trying to make more of what you have happen. You're trying to increase your real estate portfolio, your business investments, whatever it is you're doing. I get it 110%. Who else to get it than somebody who runs his own businesses in the digital marketing agency, lead generation space? I have those till this day. Affiliate marketing in the health space, a huge one there that I've done for a long time, that I did for a while, helping people with supplements and vitamins, ergonomic chairs, pain relief cushions that are in your lumbar, for your vertebrae, your discs, a lot of things for your pelvis, your bottom, a lot of other things that I've done for a long time, other ventures or verticals in the affiliate marketing space now, helping out other people understand what they need to use in terms of tools and more. And then other ventures here that I've done, and I still do, where I invest my money smartly. And then over here, I've been doing this for a while now as a business funding expert. You could say a pro, and I'm not saying that because I'm cocky or I'm full of it. That's not my personality. For those of you in here who have an arrogance, or you're arrogant, or you're ignorant, or not good at reading somebody, or you're just egotistical, or you're just fed up. You're like, I'm not none of that. I'm just stressed out, Michael. I wanted you to help me. And that's not the right approach. And so I say this because I'm 110% plus confident and certain in what I can do and deliver. And sometimes we just have to look at some things that the lender may change where, hey, it was like this in this market. That's why now in this market, it's a lot harder. If you guys were preparing last year, those of you who were preparing not in the third or fourth quarter, but those of you who were preparing in the first and second quarter of last year, their personal and business credit, getting a hold of their finances, it was in better shape. You guys are the ones who are going to be thriving most right now. Even if your finances, let's say you're trying to make more money, but you don't have enough money to make money. And what the money you get now, it doesn't stretch you as far. So now you're getting $20,000 where you could have got like $40,000 to $60,000 plus. Or now you're getting $20,000 where you're buying a piece of equipment now that was once $30,000 to $40,000. Now it's $50,000 to $60,000 plus. And even if it's the same amount, the value for what you're getting in this market, it just doesn't make sense. And then the resale of that, you're talking about wholesale prices then for other stuff. And then you're talking about giving that money back and what you get in the beginning. It's just a lot of back and forth. It doesn't make sense for a lot of business owners in certain industries. It doesn't make sense. So let me go to the comments. Call. Like I'm just going to pick up a call randomly. Now, if it were a call that I didn't have as a name on my phone, or that I did, that would be a little bit different and I would have to get back to them depending on what the cause is too, if it has to make sense. If it makes sense. Idea Global Publishing. Appreciate you. Thank you. You need cash. How much are you looking for and what are you using it for? Modern Day, there he is. Appreciate you. Thank you. Always coming out strong. Appreciate you. Thanks. There is no catch idea. Everybody in here, I want to make it very, very clear. So if you ever return back into this room, for one, I'm not a scam, period. I don't have the energy and time to do that here. For how long have we been going? I haven't been keeping track. Like if I go on a walk or on a jog, I would be keeping track of that. But I know we've been in here for a little bit of time. Catch, I would have probably told you guys already. There is no catch to funding, period. No catch to funding at all. I want to say that. I don't care if you guys go watch another YouTube video. That's not me. But be very cautious again because all the information out there can be very misleading. I was watching a lot of content and then on blog posts. Like, come on. I'm like, this stuff is so outdated or just, no. I would never send somebody there. But because they have a high reputation, they've been around for 20 years, longer than I am, and they have a team of 100 people, and because they can spend on ads for $100 to $3,000 a day, great, miraculous, awesome. And so be very cautious of the information you're getting fed, and there is no catch here, guys. And I don't say this as in like I'm bashing anybody, by the way. I'm just saying this as in like, hey, this is some tough love, guys, wake up. Not being aggressive or negative, that's not my way. Not who I am. But the catch when people go, oh yeah, but you're telling me I got to pay 9.9% back or 15% back on this personal term / installment loan or total revolving credit lines that we're able to get you. Yeah, you're getting maximum help from the experts, myself and my team, and it has to be justified for the return on investment from it, the cost associated doing all that, the amount of work, the risk that the lenders have to take on. So think about it. It's not costly when you think about it. Even if you get those revolving credit cards, you can pay that amount with those cards. Like why are you even complaining about that? And then you have a surplus amount of money to do what you need to do with it. So the costs associated, the fees associated to anything like this, it's very irrelevant. And today I was in a meeting where I don't normally talk in them. I'm just chatting sometimes in the chat room while I'm working. I got to do other things too. And so somebody was bringing up the fact that the interest rates, they're all interest rate averse, or they're just like, I don't want to do it. Money's too expensive. Yeah, it's expensive for you. And it's still expensive for somebody who can use that money well. Yeah, it's still expensive. There's no such thing as inexpensive money, whether it's the money itself or if it's non-monetary. Beginning wise, the expense begins with the person. The expense is already on the person. They may already be a liability to their own business or other businesses and other investments. So the money is not the true expense. The true expense and the cost of the funds, acquiring those and using them correctly, is the person running the operations. The person is actually who is in charge of doing things. If you're not in a situation where taking $20,000 is going to increase your return on investment, and you're looking at it as, what will increase my bottom line, but it's going to do a lot momentarily to the next 2 to 3 months, and you really needed that money to secure that contract and that piece of equipment, I can come back and get more funds. I get 2 to 3 more pieces of equipment, boom. Within less than a year, Michael, I paid this back. I didn't even need a longer term. A lot of you guys think you need a longer term. Better interest rates for those who do qualify are there, but it's still hard to get. Prime rates at 8.25% plus. And if you're doing the lowest with factoring, unpaid invoices plus 2% or plus 2 to 3% more or less, yeah, you may get into those 10% to 11% ranges. Even with cash out refinances, you're looking at somewhere between 9 to 14%, a little bit less sometimes, depends. And then a cash sell leaseback or similar to that, you're seeing 12 to 14, 11 to 14%. So what's the cost of you doing business is the question, and how can I take those funds? It always has to be an open-ended question. I never go into my day, guys, asking a closed-ended question. Well, I'm not worthy. How can I be more worthy? Well, I can't do this. How can I do this more effectively and more efficiently? It's never and if it ever is, it's just a little bad moment. But don't let that bad moment bleed into the rest of your day. So there is no catch on any of this. None of it. Those people out there, EIN only. I'm very transparent with you guys. The EIN only, no doc, like, yeah, 0% interest business credit cards. There might be some out there, but they're really non-existent. And for the majority of people, you just won't get them. Well, I just want to protect my credit, or I just don't have good credit. Well, fix your credit. Okay, well, I can't fix it right away, and it won't work because I need the money in the next 6 months because I have the new inventory that I get that. But what about looking for a credit partner? Can somebody assist? 401k, IRA financing. Sorry, got my screen on here and I had a video that was playing from earlier. It's on one of my tabs, so I accidentally clicked through it. But you got to understand, can you leverage a credit partner and have them assist you? Can you not? So I've had people recently where I couldn't help because for some of them, they've never taken out funding ever in their life. And then they had to come to me. Oh my God, I'm in a tight pinch. I can't pay my bills. Okay. What's the problem? How much are you paying now currently? What could be helpful for you, at least for now? If we were to approve for this range, would that be enough of? What would you see? Maybe it might not give you enough of a return on investment, but you can take a temporary setback and then come back and get more. Well, and then they can't qualify because there's too many negative days, non-sufficient funds in the last 3 months. They're way over 5 every day, and then you have a turnaround the next day, and then the next day you have nothing, and then the next day you have something. The lenders, and if you're already in a high risk industry, like, that's the repeating pattern. If you take more money, you're just gonna take that money and pay off some debt that's gonna help, or some expenses, but then you're just gonna be right back into that hole in a month from now. So how do we know that we're gonna be able to sufficiently take out money out of your account when you're ending up with nothing? You're ending up with very little. So cash flow, guys, it's very important. Make sure you guys keep more money, transfer more money, or deposit more money is the word I'm looking for. Depositing correctly into your account or accounts in that one primary account, what I recommend. And understanding what goes out and when it goes out. Can you find a way to lower those expenses? You need to relieve people. Oh man, I got to relieve people, but that's going to take care of your payroll. Oh, I got to trim expenses here from certain machines. I'm going to have to reduce 2 to 3 machines, but have 1 or 2 machines just running, and I'm going to have to hire 2 more specialized people to run those at the most efficient costs. That's the cost of doing business. When you have somebody who's running parts of your business that are not doing it correctly and you wonder why, you're in a position that you're always having to turn and find more business owners or more employees. You're already having a churn rate in your business, and you're already having to worry about a churn rate of your customers. That's not what you want to do. Do I do one-on-one consulting? I do to a degree. It's not like I have to charge you guys for. I could be charging a lot because I do more than just the funding side. I do a lot. I do a lot of high-level calls when it makes sense to do. I don't always give that because of my energy and time and where I have to devote that. So when we talk about one-on-one consulting, guys, I'm not going to be on a call-to-call basis for one. Secondly, I'm not always doing phone calls with each person. I funded a lot of clients. Believe this or not, but this is the truth, is that I funded a lot of clients who I have great, good personal and business relationships with, who I've never to this day had a phone call with. That's not as crazy as you guys think it is. Because when you're on this side and you really understand everything you're doing in operations and how all this side works, it makes a lot of sense. And for a lot of business owners, they go, damn, that makes complete sense. Now, there's another case to be made where that is justified and we have to at a point, and it has to. Does it really have to? But one-on-one consulting, yeah, I could be spending my time on calls and saying, hey, I have a booked appointment today. And sometimes I can't always make the appointments, guys, and it's normally starts as a Facebook consult. I usually start it as a Facebook consult, and it's not normally one of these or a phone call or whatever you call those, FaceTimes. I think that you can do that on Facebook. Correct me if I'm wrong. But it doesn't always evolve into that because I've learned over the course of my career doing this, I'm not the one that's hard to trust. It's you who's hard to trust. And as in everybody. But when you show me that you are trustworthy, but are you loyal? Loyal can come with that, but are you loyal? Are you trustworthy? What's your attitude and effort like? I'm looking at the psychographics. I'm more than the demographics. I'm looking at how the person thinks. What are their values or beliefs, their aspirations? How do they think? Are they very sporadic? Like I have people right now telling me I'm so busy, I can't get to this, I need a team to... Hey, I told somebody just the other day, I sent them an email. Hey, please I know you're busy, I get it, you're very busy in doing what you are doing, I get what you are doing. But when you have a moment, can you please fill out these questionnaires? I had asked you to fill that out some time ago. I'm sure you saw these, but haven't gone to it. Or something like that. And so when people get back to me and they try to call me all over the place, I'm like, no, our next point of contact was this. But Michael, something came up can wait. Sometimes it can't. But you still haven't done what I've asked you to do. How am I supposed to do this with my lender or my lenders if I don't have what I need? Like, what am I supposed to do? Be on phone calls with you every single 10, 20 minutes a day or every single other day? It's not as projected as you guys may think. And even if there are more people in the company, would I be doing that? Because a lot of the times it's just me doing this because I'm an ISO, I'm independent. And that's what you guys want. You want somebody who's going to help you and consult with you in other ways as well, at least initially. So that's not always given. I'm not a phone call kind of guy, to be very honest with you guys. I do very well on calls, like very, very well. Like I can figure out the main issue and the main problem. And I'm very understanding. I'm much more of a listener than I am a speaker. And what you are telling me, I know it very, very well. Like, I do. When you're telling me your situation, I completely got it. Like, I even told somebody the other day, before you told me that about your production, like, I already knew where you were going with that. Not only because I actually worked in manufacturing, I worked in construction, and I was in warehousing, I was a ramp agent at some point in my younger 20s. I was in other positions. I couldn't move up another role. When I was working for one of my latest financial logistics company, or one of the companies there, servicing HP and P-Cell, huge transition. Just before that, I went over to another company with other employees, but 50 plus people got relieved. Unfortunately, I was one of them, and I had to go back on unemployment benefits and food stamp cards. I've been there, done that. It's not a good feeling in my younger 20s. Not everything is linear. I went to school, educated myself. I studied a bit of sociology. I was a Division I soccer player. I'm not genetically gifted, guys, but guess what I have that most people don't? And if you have this and we're on the same term, what I always had to work with is this and this. In school, I was always very studious. I always put my head down first. I was not a talker. I was a kid in class who, by means you can say quote unquote popular, because I was part of the team and where I got to at a level that I got to. But if I didn't have any of that, from what happened in my earlier life, in the transition that I made, yeah, academically, in the way that our parents, with my younger brother, and I had to lead the way. I'm the oldest of two. So I had to set that example by going to school, by educating myself, going to school, going to the university system, putting my head down, working in math, working in systems, doing all this stuff, and I love doing that. So then I transitioned over from the sociology part of it to the chemical engineering. That's just how my brain is wired, so I tested myself there. Went well, but I made a transition because I wanted to start a business. So I got into business administration, and the rest was history. I worked in construction manufacturing in the fields position, not in the actual like cubicle, until I moved into like a blueprint room. Eventually worked my way through, but I was on the machines working, putting the tooling in, taking out the tooling, moving it at part of the production process, oiling the machine up, going to other machines, learning those, how those worked. Boom, putting my hands in, getting my hands in dirty, working with chemicals, moving buckets, emptying out buckets, putting stuff into them. This was not all clean work. And when I was in a construction job, this was for like a manhole sewer rehabilitation business in California. And no, it wasn't necessarily the position that I should have been in, of course. But I made a change because of the high risks associated with that as well. And then I had worked with my uncles, and I had worked with my cousin and a few other friends. So it was convenient enough, and getting into that, I learned a lot. Driving a lot more manual trucks, going all over the place, driving trucks to famous areas, getting in the hole when I had to at times, and then bringing in supplies, doing things, moving around in the shop, putting things into the truck, layering things together, making sure everything was correct. The list can go on and on, but hopefully you guys get a point from that. But I just, at a point, like many of you wanting to start a business, I really didn't want to continue to let people down and feel like I wasn't enough, or I couldn't give them enough. So I just was tired of that, and I knew I had to make a change, and I didn't want to feel like that anymore. No, I do not love to talk. If you were listening, I don't know if you heard the part where I said I don't love to talk. Maybe it came a little bit later. That's fine. I completely get that. But what I've learned, and this is what you guys need to learn too if you haven't yet, this is going to help your business, your own business, and depending on what you do, this is why I recommend that you guys understand each part of the business and you kind of like get your hands in it and do it yourself. But what I've learned for a long time, and I'm not a talker by any means, I'm not a smooth talker, but I've learned the skills. Guess what skills those are, guys? Communication is one thing. I sucked at communication. In my communications class, I sucked going up in front of everybody. I froze. I would freeze. Nowadays, if I were to go in there, I would care less about like what people would think. It would be the right message, of course. But presenting wise, because I've learned the skills, and those skill sets come from not only effective communication, public communication, but marketing. How many of you in here learn marketing or have learned it? How many of you can actually say that you know what it takes to actually have that kind of effective communication? Not many people do. Well, I just outsourced my work. I just gave it to someone else. And, well, okay. So how do you know if that message they're giving is correct? Well, the data says it does. And, well, if I asked you if we had to change the message, if we had to change the subject line, if we had to change the body of this, how do you propose we do that? So what I've learned over time is that, and I'm not doing it unethically. I'm not doing it like that at all. I don't ever do anything for my best interest, guys. Sometimes I don't even realize that I'm going into like the benefit and features of this part and future pacing of that, and then the offer communicating it like that. But whenever I do, it's always ethical, and I speak less. Literally, when I'm not here, guys, I'm not speaking at all. Like literally, if it's anything, it's like email, text messages here and there. If it's a phone call, if it needs to make sense on a phone call, I'll give it to you. If it doesn't, it doesn't. So you haven't done what I've asked you to do. Now you're doing all this stuff. You don't deserve that. And you know you don't deserve that. But you're doing what's most convenient to you. You saw what I sent you. The next step hasn't even taken. But why hasn't it taken? Does it have to take a phone call to do that? 20 minutes and 30 minutes and no. This call needed to be done in less than a minute or two. But now you're putting your own spin on it, and I get where you're going with things. I'm not dumb. And so you have to understand energy and time efficiency, guys. And a lot of you guys do, but a lot of you just really time management, punctuality, discipline. When you really have that and you're up here working at a higher standard, higher level, I'm not saying you got to be where I'm at, none of that. But when you really start protecting your energy and time, you begin to understand. So for me, I'm more of a, if I weren't doing this, I would be underwriting files every day. Like being the actual underwriter, like the real underwriter. And yeah, I could still do that. Or be just the lender. Because that's where my brain, I'm the back end. I'm like the silent partner who pulls the strings, can help them with the marketing and advertising, boom, boom, put this product, understand the value ladder, understand this, understand the data, the systems, everything that drives it. But I have to also be the person in front of. Who's the actual person? Who's the real broker? Who's the real person doing that? Because, yeah, at any moment I could say, hey, I'm done. And I'm just going to do underwriting and I'm not going to be the person in point of contact. Because I could. But I have it doing this way because of other things too that I have going on. And there's a bigger purpose as well, being on the front end, that I'm seeing a lot more and making a bigger difference there. And for a lot of other reasons. But I get it. If this is your guys' first time, or if you've never heard about who I am as a person, you would assume that I'd love to talk just by watching a video. But I don't. I just wanted to address that. Yeah, so bio, link click, questionnaire, second or third button. Second button is a business funding form. Third button is a real estate form. On YouTube or anywhere else, down below in the description, go through that form, carefully fill it out. I want you guys to read the heading at the top. If it's the real estate form, I got to add a few things, but the other forms, they should have at the top. I should probably even put a big red stop sign in front of you guys because a lot of you guys don't do that. So read the parts, and I say, hey, don't waste my energy and time. I'm very upfront with you guys, and I'm very nice, but just don't mistake somebody's kindness for their weakness. So really get to understand that won't be the way about it if you are not putting your own. I got a text message from somebody just recently, so I'm gonna have to go to that in a second. They probably took it another step, but that's sometimes what happens. So bio, link click, questionnaire, and then from there, I'll be able to help. See, when you really get to understand the person, if I got to understand Daniel, if I got to understand Sally, how does Sally's brain work? What do you enjoy doing? That's what I want to know. Does that also translate into your business so that it actually help your skill set? Yeah, Michael, I don't want to be the front of everything. I like to be the second or third point of contact, that if somebody were to come in and they're really at the ending stages, okay, this is how I fulfill on it. Okay. Why do you like to do that? Because it works to my best abilities. See, I'm more introverted and I'm a very cerebral person. So whenever I get a file, I want to review it this way. I want to look at that way. And it's more energy and time efficient. So me getting to understand Sally, me getting to understand Julie, Karen, Edwin, John, Jesus, or whoever, I have a better understanding of what's going on up here. You need a loan or a credit card that doesn't look at personal credit. Got it, Mark. Thanks. Why is it that you need one or the other or both that does not look at personal credit? That's a good question, Uda. Can I get funding with a 3.5-year-old bankruptcy and a new LLC? So was this bankruptcy on your personal side, Chapter 7, Chapter 13? Which one was it? You could just say personal or business. For how long? You said 3.5 year old. There's still more that we'd have to look at why you did that. That's one thing. 3.5 years, if it was just on your personal side and it was like a personal credit card, like there's credit cards to go through. That's one part. Now, was it dismissed? Was it discharged? When was it? If it's only been dismissed and it's on the business, we really can't help. 3.5 years, we could make a case that's above 2 years. It's an above 3 years. But a lot of the lenders are going to want to have even more. And if it's not been discharged and there's no proof of it, court order or anything that can show us in terms of paperwork, if we had to ask for it, it's going to be hard to do. It just depends on the kind of the risk that the lender takes too. And if you have, and since you have a new LLC, but is the new LLC also meaning you have a complete new startup with less than like 3 months time in business, or have you been in business for much longer than that? Was it an old business that now you have a new business now? There's a lot of questions around that. Yeah, start on the link. Everybody thinks that a call is going to be the most appropriate way to always start this. Once you guys see what I do, you guys will look at it different and go, oh, okay, I see why he does it the way he does it. And it's more energy and time efficient. Think about it, guys. How many people do I really help? Plenty. Do I remember them? Of course I do. I do remember people. And people also, because of who they are and their stories too, make a big difference. And their business, yeah, it matters. But I wouldn't be doing this job or this, not a job, I'd be doing this career anymore if I was just 20 to 30 calls a day. Like, ugh. Like you wouldn't see me being a person working in that environment where it's like high sales pressure. I don't even like to use the word sales in whatever context, even if it's good or bad. It's like not my background. I know how to do it well now, but it's not like what I grew up on. So I wouldn't go to one of those companies and ask for, hey, and then they pull you in, the boss, hey, how many clients did you get funded this week, or how many did you get funded at the end of this month? Oh, that's not gonna, like, get real. And so you have to know the person and really get to understand that, because if you don't really understand that, you could be here all day long asking for phone call after phone calls. And I know those people who keep asking for phone calls but don't ever want to take the time to actually get to know who that person is. And it doesn't always need to be a phone call immediately. There are other ways. There are people who come to me from a lot of my content too, and people who I've been referred to that already know, and they already gave them a heads up. They're like, hey, Michael, I've seen your stuff too. I know who you are. I know what you're worth. Can you please send me some more information? Even without them asking that, a lot of the times I'll send it. So from there, and then I give at times a Facebook consult. There usually will be one. But again, like I said, like, just imagine, not because you can't get funded, I wouldn't do it. It's just, you got to think about the information that people seek versus them doing something. There's a big difference. There's a big drop off. And like someone just recently, I'm like, dang, like I get their situation and I completely get it, but this didn't need to even be a phone call, which we didn't do. And I'm glad I didn't. And because it just didn't make sense. Other people out there would say, hey, yeah, let's do it. And they would charge you $30 to $40 for their consult, or you would say, hey, you did a very good job, and how about I pay you and worth your time, and whether they want to or not. I'm normally the person who tells you, no, I'm okay. You don't have to pay me. Don't worry about that. I appreciate you though. Thank you. Yeah, you're most welcome, and I appreciate you. Thank you, and for that comments. And just so you guys know, this is very friendly stuff. I'm a very friendly person. I wouldn't say I'm the most outgoing. I am outgoing when I need to be. Introverted, ambiverted, with extroverted qualities there. But I fit into good settings. And so, not that you have to hear me talking a lot, because I'm more observant. I'm more of an internal thinker than saying it. When I need to, I will. to correct something and to make something better and to lead even more. But a lot of the work that I'm doing is from up here and sitting down and looking at the messaging from these lenders. What's their reasoning here? What do they look like that? What do they look at that for? If I'm looking at the bank statements, okay, too much of this, too much of that. It just makes everything more harder to go through it in some cases, excuse me. Turn your volume up. I think mine is up. Or you might have to exit out and come back in. But I'm going to get going, guys, here in less than a minute. I'll leave it open for a quick minute if anybody has anything. If I did miss anybody, I do apologize. Kind of moving through. Otherwise, we would probably be here. Knowing me, I'd be here probably just trying to get the material out. We'd probably be here for like 2 hours because I don't speak fast. Right now, I'm just trying to kind of get through things. But in person, I'm more of a thinker. So with me, don't always hear what is being said. Hear what is not being said. Read between the lines. Sometimes I'll tell you as it is. That's fine. I'll tell you how it is. But hear me for what I'm not saying. That's also how you have to interpret other things, not just through me, but with others. But others are very like, is that really how it is? Or is it just a lie? I won't lie to you. I'm very transparent. Like I told you guys earlier today, there's no catch. I'm very loyal. A lot of people, they come to me because of who I am as a person at a core. The what of the business or the why of the business, the experience, the versatility, flexibility, loyalty, and more, that's one part that comes with it. But how about the person? That's the part that you guys kind of have to understand. And I kind of give you guys a little insight into what I've been through earlier and why myself to a degree. 30 more seconds. Does anybody have anything? $15 more seconds. Does anybody have anything? Hey, I appreciate you being here, though. It's good to know you're here. Yeah, and we are at the end of the video. But I should have the replay up on YouTube. If so, perhaps. May not be, though. But I try to come on here. I'll try every other day. I've been kind of consistently, kind of every day, not always. But I have a lot of things going on as well. But I try to drop in here for you guys to help you out, really. With not like asking you to go submit an application. I'm not really even asking that. I'm just asking for like a pre-qualification, or I'm asking for just your undivided attention. I'm just asking for your guys' accountability and responsibility. I'm asking for your guys' true virtues. I'm asking for your guys' true attitude and effort. I care about how can we make ourselves excellent before anything in the business. And I know it kind of sounds cliche because it does, but the person, the characteristics of the person are going to dictate everything, guys. In life, everything happens from your character. The reputation, you can build a huge reputation. Okay, cool. You built a huge reputation. But who are you when you're not in your business? This is their habits. This is their routines. These are their tendencies. I'm not judging by any means, but here's where I see something. And I go, that's what I would work on more of. Like this morning, I exercise, guys. I'm not coming into my work on Tuesday mornings without exercising. Usually my Tuesday mornings, before I do anything, I'm working out. I'm jogging in place. I don't get outside. I don't get on the treadmill. I'm stationary in the room. I'm doing my exercises, boom, boom, 20 to 30 minutes, get a sweat going, jump into the shower, come out, change, get ready for my day, come downstairs, read some books, write 3 things that I'm grateful for, go through my planner, see what I'm going to do if I didn't write anything for the day. What do I got to put together? Do a little bit more. And then I get into some emails and I do a few things. I don't always respond back right away at that time, or I will, depending on the day, depending on the circumstance or circumstances. So it just varies day to day what my activities will be and what I need to do. But a lot of what I'll dictate from that is the person. It's who I have had to become. And just working on yourself, guys. I'm not a guru, but working on yourself, masterminding with like individuals. How do I get my health better? How do I improve this? How do I improve my spirit? How do I improve my emotional side? How do I improve my stability and my physicality, or whatever it is, emotionally, mentally, spiritually, physically, emotionally? You can go through all those dimensions, and there's different ways and you can go about that and what you do throughout the day after you're done with work. Like, what do you guys do after work? You have so much going on, but you could spend a quick 10 to 20 minutes, if not just relaxing a little bit. Slow down. You are most welcome. 15 more seconds. I'll leave it at that because somebody did comment. Does anybody have anything? All right, everybody. And the request for being on the live video, like I said, I haven't been doing that or really do that. Maybe later on at some point. If I'm open to do that, I will. And I'm okay with that. Then I will do it. I never have anything to hide, of course. Never do. But for the time being and from what I'm doing, this is how I want to keep the format. All right, everybody. Appreciate you all. Thank you for your energy and time. Have a great rest of your day / evening, whatever part of the world you are in. Perhaps it's the morning there. And let's keep rocking it for the rest of the week in whatever part of your business you are in. And let's carry it on. If you're working through the weekend or some parts of the weekend, get what you need to get done, free up some time, be around family, do what you need to do, get those applications in, or you're waiting for another week or two when to send them in, or for whenever that time is right and that I can help you with. I'm not ever going to pressure you. When it makes sense for you to do, then you do it, and I can highlight whether it does or doesn't, and I go, okay, here's my point of view on how I would kind of approach that, but you can ultimately make that decision, and you have the numbers to decide that. But from what I'm seeing, and if you shared with me that, this is what would make sense. So that's all from me. Appreciate you guys. Thank you for tuning in, and I'll speak to you all in the next one. Take care. Bye.